Fundamentally, the loans are missold. The website just talks about making small payments every month. It doesn't explain that the loan is typically of the order of £50,000, that you pay interest the minute that you start studying. Alan used this extreme adjective that the interest rates were horrendous. And that's a puzzle for me, because on a credit card you'll pay the order of 30%. So student loans at 6% are a steal by comparison. Currently, the government estimates it'll lose of the order of £10 billion per annum on the student loans that are being issued now.
Hello and welcome to the Institute of Economic Affairs podcast. I'm Callum Price. Today I'm delighted to be joined by Peter Ainsworth, who is, among many things, the author of a recent IEA paper called Shares in Students. We're going to be talking to Peter about the current debate over higher education funding, student fees, and what is to be done about it. Peter, welcome to the podcast.
Nice to see you again, Callum.
So could we start by talking about the current debate? Alan Johnson, the former Education Secretary, has called for a cut in the, quote, horrendous student loan interest. He basically wants to move student loan interest from RPI to CPI, all a bit technical. Talk us through what's going on.
Well, to be honest, I don't entirely understand, because Alan used this extreme adjective that interest rates were horrendous. And that's a puzzle for me, because on a credit card you'll pay the order of 30%. So student loans at 6% are a steal by comparison. In fact, that rate is comparable with a mortgage, where the risks to the lender are much less. We have to remember the taxpayer bears a significant risk on these loans. So I don't understand what the issue is, other than that perhaps people are just unhappy to have to pay back their loans. And with that, I do have some sympathy, because the reality is that students are not getting into the sort of high-paying jobs that they probably expected and were led to believe might happen. So, yes, there's a complaint about interest rates, but and then, as you say, for the RPI, CPI impact, that would only have about a 1% difference. So that's kind of small beer.
But it's sort of responding, isn't it, to a current sort of wave of anger, frustration, debate about the student finance system, because there are lots of people like me who have had those Plan 2 student loans, went to university after 2012, had to pay £9,000 a year, and are now seeing the money come out of their paycheck every month. But then when they check on the student loans website, the size of that loan, having been working in business for 10 years plus sometimes, that loan number isn't really going down at all. So people are asking what's going on here.
Yes, the issue there isn't so much the rate of interest or the amount you have to pay back each month. It's that fundamentally the loans are missold. If you go on to Student Finance England and have a look at the way the loan is presented, the website just talks about making small payments every month. It doesn't explain that the loan is typically of the order of £50,000, that you pay interest the minute that you start studying, and that if you only make those small payments, then obviously, because of interest, the net amount will grow in the background. It's just the same as if you had a mortgage, and if you didn't make the interest payments, then the size of the mortgage will get bigger. It's nothing surprising, and if you wish to pay it down faster, you can do so. It's free. You can pay more, but because students are sold on the idea that they'll only pay a small amount each month, they kind of assume that will dispense with the loan. And as you just mentioned, it doesn't. It allows the loan to grow in the background if you don't pay enough off.
Exactly. But then the one defending part of that is that the loan disappears after a certain amount of time. So why should I pay one of these student loans back, be at all incentivized to pay it down further when it's actually just going to disappear after a certain amount of time?
Well, I'm very glad I don't have one of those loans, because I would find that a very challenging internal debate one would have to have. On the one hand, you have this apparently huge ballooning debt. On the other hand, at some point, it'll just disappear. But I think psychologically, it's difficult to have that big debt, because if you did then start to become a much higher earner, and you wouldn't turn down a much higher, if you were suddenly offered a significant hike in your pay through your own company paying more, or another employment opportunity, you wouldn't not take it because of the loan or the obligation, yet you would then at that point find yourself paying a lot back.
Yes.
So psychologically, it's a fascinating and unfortunate situation many students find them in. Of course, the ones who earn a lot will, through the system in any case, get to pay the loan down much more quickly, and they'll dispense with it. The ones who are unfortunate and get minimum wage jobs or remain unemployed, they will just accept that they'll carry this fantasy loan and it'll be wiped off when they retire. But the people in the middle, I think typically is people earning of the order of £50,000 to £70,000. They're kind of stuck in the middle where unless they choose to pay more back, then the total amount of the loan will increase as they go. And they probably have hopes of earning more in the future. And at that point, that incremental loan will be quite a big burden for them. So yes, I feel for this generation. The scheme hasn't been well thought through, and it certainly isn't communicated well.
Mm-hmm. And it doesn't really seem to work for any party, does it? Because on one hand, you've got the students or the graduates who have this huge sort of psychological burden of this massive bit of debt. But then on the other hand, you've got the government, or the taxpayer, I should say, who is on the hook for that debt. So the reassurance to the graduates is, don't worry, if you don't pay it back, it's going to disappear. Well, it's not going to disappear, is it? It just doesn't just disappear. It falls somewhere, and it falls on the government and therefore on the taxpayer. But at the same time, universities, we're constantly told about how universities are in a funding crisis and how they're on the edge of collapse and how they need to import thousands and thousands of international students to help prop themselves up. So who exactly is this system working for?
Well, the system does actually work well for the institutions because they get a large amount of money and there's no real test as to whether or not they deliver anything useful. The way that is designed to work through the system is through the Office for Students, regulating them and putting in things like the TEF, the teaching, the thing that regulates supposedly the quality of their teaching. But the problem with that is it doesn't actually result in good outcomes for the students. There's no element of the present system encourages the institutions to deliver well for the students, so the students end up in high-paying jobs. But the institutions at least do have a large sum of money guaranteed to them. When you sign up as a student, the first day you attend, some money arrives in the university's bank account, and then it's got to keep you satisfied, as it were. But actually delivering an education that will help you to get a high-paying job, they're not paid for that at all.
Yeah, that's exactly the problem, isn't it? And this is what you point out excellently in your paper, that government universities aren't paid to educate; they're paid to recruit. They're paid as soon as somebody walks through the door. They're not paid on. They get their money no matter what job the student goes on to. So what, Peter, would you do to the system? You've written both that paper and an excellent piece on our Substack, in our British Afwera series, saying things that we could get rid of in the system to improve it vastly. Walk us through those reforms.
Well, the important thing is to align the interests of the institutions with those of the students. So the students want to earn more. Yes, they don't want to pay a large debt, but the debt would appear smaller if they were earning more. And so how do we get them into better paying jobs? Well, pay the universities if they get students into better paying jobs. And the simplest way to do that is by making the universities issue the loans rather than the government. So the university then, at the moment, as you correctly said, when those loans are written off, it's the taxpayer. People who didn't go to university, they subsidise those who were fortunate to go to university. That's not fair either. So if it sits with the institutions who currently get essentially free money through the student loan system, if they have to take the risk, then they will make damn sure the education they provide will result in good employment outcomes.
So would you have the universities loaning the money to the students themselves, or through a sort of third-party financing system? How would that work?
Oh yes, they would use. There are third-party companies who do this for universities at the moment. I put in place a small plan at the University of Buckingham, whereby Buckingham took the risk, and a third party actually technically made the loans. Of course, they're not loans; it's deferred tuition fees. The university just says, you don't have to pay us yet, you'll pay us in the future. So it's slightly different from, say, a mortgage where the bank literally gives you money and then you go and buy the house. All that's happening is the university is deferring the receipt of its fees. and if you end up in a good job, you'll be able to pay back the cost of the tuition fees. And if you don't, then the university will be on the hook. So they'll not only have an interest in educating you better while you're there, but also when the student leaves university, they'll have an interest, if the graduate doesn't get an especially good job, they'll have an interest in following up and helping them to get a secure better employment post-graduation as well.
Mm-hmm. And then what would you do with the fees themselves? Presumably, so we're basically talking about here getting rid of government-backed student loans. Would you then liberate the opportunity for universities to charge different range of fees? Would you get rid of the student fee cap?
Absolutely. One of the things that I think is extremely unfair is that you can go to universities like Oxford, Cambridge, Imperial College, extraordinary world-class institutions with very good brands and very good facilities, and you only pay the same going to those as going to a smaller local university that doesn't have the same prestige or the facilities. And I don't see how people consider that to be fair. And clearly the likes of Oxford should be charging a lot more. And that would actually help the other universities, because they would then be able to compete by having a lower fee. One of the things that's been happening recently with the crackdown on the recruitment of international students, making visa conditions harder, is that the Russell Group have been reducing their tariff, taking on more of the students who didn't do quite as well at A level, and that's all right for them. But for the universities that normally have appropriate programs for the ones who do less well at A level, they're being deprived of students. So and they can't compete on price, which would be the classic way. So I think there are courses that should be a lot cheaper, and other courses that should be more expensive.
Mm-hmm.
That's obvious. We know that going to Oxbridge, your earnings potential are much higher than going to some of the local universities. So yes, I would liberate tuition fees, absolutely.
And that's one of the interesting things about whether you implement a price cap. I happen to know somebody who was in a senior position in the university when the fees were raised, or the fee cap was raised to £9,000 a year. And they said that they had a bit of a conversation. It was a Russell Group university, but it wasn't Oxbridge. And the conversation that went on in that boardroom was, how much should we charge for XYZ course? Shall we charge 9,000, or shall we go slightly lower to try and compete with Oxford and Cambridge? And the answer was effectively, well, if we don't go to the 9,000, then everyone's going to just immediately assume, because everybody's hitting that 9,000, and if we charge less, everyone's actually just going to assume we're signalling that we're a worse university. But if you remove the cap entirely, then there will be a genuine competition in prices, and a genuine, without a cap, then there's no sort of roof to hit to signal that you are the highest level, and therefore the competition happens a bit more naturally. And I guess at the moment as well, different courses cost different things to run, right? I did philosophy and politics. There weren't very many contact hours. There certainly wasn't very much equipment. There was a lot of books from the library involved, but they're not nearly as expensive as, say, the resources required for a computer science degree or physics degree or medicine degree. Presumably, at the moment, there's a lot of cross-subsidy going on. Humanities students and the fees that they're paying are cross-subsidizing across to physics students or whatever. Presumably, that would be, you'd be able to get sort of fix that.
Absolutely. People talk a lot about the importance of STEM subjects, and they are, and generally, or it's no guaranteed high earnings path through studying a STEM subject. Plenty of STEM students don't get into high earning occupations, but in general, earnings expectations are higher. And yet, exactly as you say, because those courses are more expensive to deliver, the humanities and the creative arts students who probably have lower costs of delivery are subsidizing the STEM students who have higher expected earnings. That doesn't seem fair to me either. So I would expect the high cost courses, which all other things being equal, do lead to higher earnings. They should pay more, the fee for the, and then the humanities students who possibly have less promising earnings outcome expectations, they would be paying less, which would be fair.
And also, presumably, it would be less. You would have fewer courses that do mount students with debt and do therefore cost the taxpayer, that never end up in gainful employment, sort of lower quality random degrees that don't need a degree. To go into, people that go into careers that don't need a degree.
Absolutely. Look, I'm not trying to reduce the number of people who go to university. I think that it's a great experience, and I possibly even more people should go to university. But the issue is that they should be taught things that are useful, and many of them are not taught things that are useful. And I think you could deliver some courses at lower costs that would be more useful than the higher cost courses people pay for at the moment. The University of Buckingham, of course, has been a pioneer in 2-year courses, and that reduces costs for the student enormously. Just not having to pay a third year of maintenance is a huge saving, but it hasn't really caught on because it's only people because everything is at 9,000. People just think, well, I want the full experience for the 9,000. That means 3 years, and so we don't have a real market. We don't have the real differentiation, and it works against many students.
Now, in your excellent piece for our Substack, the British Referral series, you went through some other reforms, some other things you'd get rid of. Could you walk us through those, starting with maybe the Office for Students?
Well, absolutely. The Office for Students has to go. There's no evidence that any of the regulations it's put in place actually help students to get better earnings outcomes at all. So there's one report which suggests that a typical university needs about 17 to 20 staff members just to deal with the regulations, and that's an enormous waste of resource. And so, yeah, I don't have anything that the OFS does that has any real value. I think, what I would do, it is important that only certain entities should be able to become universities. There must be some standard, but I think we can achieve that quite simply if an institution is willing to lend to students to take those courses. Then it should qualify as a university, because it then is taking the risk. If it is taking, there's no point a business taking that risk unless it's confident it's going to help its students into better employment. Whereas presently, you can deliver very low quality courses that satisfy the OFS, but don't actually help earnings outcomes, and that institution gets free money. So yes, the OFS has to go, I would actually give slightly more power to the financial ombudsman, the university ombudsman, because at the moment, if a student applies for a course and the course is advertised in a certain way, creates certain expectations, and the student doesn't get what's expected either in terms of course delivery or expectations, then the ombudsman can make a comment but can't actually order the institution to recompense the student. And I would change it so that they can do that in the same way that the Financial Services Ombudsman can. But just the OFS, I think, serves no useful purpose and should go.
Now, we've spoken a lot about aligning the interests of the students and the universities. Well, what if you were to make all these reforms? Do you have a sense of what magnitude would be saved for the taxpayer?
Well, it would be enormous. Currently, the government estimates it'll lose of the order of £10 billion per annum on the student loans that are being issued now. I think that's probably conservative because the present loans, the Plan 3 loans, they only charge 3% or RPI interest, which means there's no real interest rate. And the government itself has to pay an interest rate when it borrows from the market. So there's another loss caked in. And those loans, theoretically, are assumed to last for 40 years. But I just can't see how the regime can last for 40 years. We see already, we're 14 years down the road from when this new system was put in place, and we're beginning to see the backlash now with Alan Johnston and Martin Lewis and others complaining about how the system works. So I don't see how you're going to get to 40 years. So the losses would be greater. So if we assume the government's current estimate of about 10 billion a year, that's, if you do the present value of that, that's of the order of 200 billion. We would save if the scheme was abolished.
Sounds like a good plan to me. Peter, thank you very much for joining us. I'm afraid that's all we've got time for. Thank you too for watching. If you want to read Peter's report, find it on the IEA website, or his Substack post, find on our Substack at insider.iea.org.uk. Thank you for joining us, and we will see you next time.
Thank you, Callum.